see all these expert advisors on the MQL5 marketplace, you don't need to waste your money on these, especially the suspiciously too good to be true ones with equity charts that just continue to go up and up and up. Today, I'm going to show you exactly how to create unlimited expert advisors that are just like these. These are called grid martingale expert advisors, and these are super dangerous, so this is definitely not financial advice. If created incorrectly, they can blow up your accounts. So what I personally do is I have most of my money in low risk trading strategies and a tiny portion I use on high risk experiments like grid martingale expert advisors. This video is actually a continuation of a previous video I made on my channel called The Easiest Grid Bot in 18 Minutes. No code, because in that video I showed you how to make a basic structure of a grid martingale expert advisor. Just a quick recap on what a grid martingale expert advisor is. Let's say in the yellow here, we've got the price movement. And let's say we are placing a buy trade. We enter. If the price goes in our favor, we come out with a profit. Easy peasy. However, if the price does not go in our favor, then our first buy trade will be at, for example, 0.1 lots. The second buy trade, for example, might be double the first lots, and it's continue to increase the lot size for each subsequent trade. And because we are increasing the lot size, this means to get out of profit when the price continues to go down, all you have to do to come out in profit is have a tiny retracement, depending on how aggressive you are. This could be only 25% of the total moves down, which means every single trade is either in profit or every group of trades is in profit, which is why you get this very smooth equity chart. But these dips down, they can see where the lot sizes increase. That means more and more trades needed to be opened up in order to come out in profit. And these are the variables that we created in the previous video. We have a variable called init size, which tells you what the initial size of the first trade is. We've got the trade multiplier, which means from 0.1 lots, we're jumping up to 2 times. So the trade multiplier here would be 2. The grid step in pips is the gap between the first trade, the second trade, the third trade. The take profit money. So how much money do you want to take profit when it comes back into profit? Do you want to take out $1, $10, $50? So all these variables are easily configurable and optimizationable in our program. And the last number is the magic number. Because we are trading with multiple different trades, we need to have a different magic number for every single trade. If you're a good trader, you might want to check out Darwinex Zero. If you're not familiar with them, they are a platform designed to reward good traders. You can get a simulated 100k account to trade and earn money from your trading. Currently, there are a total of 4 different ways to make money in Darwinex. In silver stage, you can get between 30 and 375k in allocation, and you can keep it for 3 months. In a gold stage, where you can receive up to 500k in allocation and keep it for 6 months. Then there's investor capital, which can get into the millions and millions of dollars. And then there's the 100k permanent allocation, which comes in 2 different flavors, the instant allocation and the performance-based allocation. All these 4 different options are stackable, so you can get silver, gold, investor capital, permanent allocation, all in the one account. I've personally been trading with Darwinex for a year and a half. I've received multiple payouts from them and made it to Darwinia Gold. If you're a trader and want to make some extra money, then I have a discount code below if you decide to sign up. Thanks Darwinex for sponsoring this video. I am here with the Software Strategy Quant X version 142, and I've got the Algo Wizard open, and this is the strategy that was created in the previous video. I'll quickly scroll down so you can have a look at the different pages. You've got the first long trade, the first short trade, the take profit, the subsequent long trades, the subsequent short trades, and then all the different variables that were created. Let's go back to the first long trade, and here we can see the entry criteria that I've put in is the RSI of 10 is less than 20. So instead of using this very basic entry, we want to allow Strategy Quant to determine our entry for us. Let's delete this entry criteria and add a brand new one. But before we can add a new one, first we need to change the structure of this layout. So if we go head up to settings, on the right hand side, select advanced, and we're going to turn this on. Now you can see the backtests have been disabled. So if I go now into add another condition, you can see these two boxes now appear. It's called random conditions and random values. So I just want to add in a random condition. This tells Strategy Quant that I want to use the RSI, the Bollinger Bands, ATR, a root indicator. It will let Strategy Quant pick whatever entry condition during the build process instead of me just setting up the RSI as the entry criteria. So let's do that also for the short trade. And now instead of adding another random condition, we're going to add the negated condition, which means the opposite of what we did before in the long trade. Let's turn off the take profit for both the short trade and the long side. And if we scroll down, under assign value, the trade size, instead of using the initial size times the trade multiplier, because with Strategy Quant, it doesn't force the number of decimal sizes to 2. So instead of multiply, I'm going to select that. I'm going to select the function round under multiplication here, round, and we want it to set to do 2 decimal places, because the minimum lot sizing is usually 0.01. Confirm. And now we want to change the formula here to multiply the first number, which is a number, which is init. Whoops, we have to use the variable init size. And the second number will be trade multiplier, which is also another number. Confirm. And that's our new formula. We want to round off the init size times the trade multiplier. And we need to do this for both the long trade and the short trade. So again, here, change this to round. 2 decimal places. Multiplication. Init size. Second number is trade multiplier. Done. Let's go back up and next just take a look at the take profit logic. The current logic is based on the account equity and the account balance, which means we can't have any other expert advisors running on this particular account. So I'm going to change it. I'm going to select the minus sign, and I'm going to change it to open PL in money. And I'm going to change the magic number from current to any. So now the current profit and loss in money is going to be greater than equals the take profit money. I also want to have a stop loss involved in this trading because I don't want to risk my entire account balance. So let's create a brand new variable, and I'm going to call this stop loss money. It is going to be a double. Let's say it's $1,000. So let's add that as a condition. So let's duplicate this one so we don't have to do all the hard work again. Now our open profit and loss in money has to be less than or equal to. And instead of using a number, I'm going to use a formula. Oops, a formula of multiplication. I'm going to use our stop loss in money. I'm going to multiply that by -1, which gives you a negative number for our stop loss in monetary amounts. And change this condition to OR. So now we will take profit based on our take profit money variable, or if we hit our stop loss, so we are not risking our entire account balance. The next two tabs don't need that much modification. Go to the next trade long tab, and at the bottom here, again, we're going to update the trade size to use the function round 2 decimal places of a number, which is the trade size. This has to be a multiplication, where the first number is the trade size multiplied by the trade multiplier. And trade multiplier. Okay, we've got rounding of the trade size times the trade multiplier, and we're going to round that to 2, and we'll repeat the same step in the next trade short. That is all the modifications to the trade logic. Next, I want to check out the variables. And to see this little box that pops up on the left-hand side, you've got these little toggles that turn on and off. This means this setting can be modified by the user when you edit it and run it in MetaTrader. But I want to turn this off, so I'm going to turn everything off, because I want to set this and allow Strategy Quant to find the best settings for each strategy and each currency pair and each time frame. I'm going to keep on the magic number. So let's close this box and create a brand new rule. And instead of an if-then rule, we're going to use action only, and we only want to set our variables one time. So on init, which means when the expert advisor starts off, we're going to execute this logic. Let's call this set var for set our variable, and we're going to add our first action, which is assign a variable, and press confirm. The first variable we want to set is the grid step in pips. And instead of picking a number that we think is right, let's let Strategy Quant pick one for us. So select use a formula. I want to do a number, but instead of a number that I set, let's select random. So this is called grid step pips R for rand. See up the top, see this random number, it is currently set to default. So we want to change it and control what the random number the Strategy Quant will generate. So let's go between start at 10. It can go all the way up to 100 pips, and I want to step by 10. So start at 10, stop at 100, and jump up by 10, and press confirm. That is our first variable defined. Let's create 4 more. 1, 2, 3, and 4, which are for the variables initial lot size, the trade multiplier, the take profit in money amount, and the stop loss in money amount. For the initial size, again, we're going to use a random number between 0.01 lots to 0.10 lots to and jump in steps of 0.02. With the trade multiplier, I want to start at 0.8, which means 8% of the initial lot size, and I want to at most go up to 2.0, which is a maximum of double the first trade, and I want to jump up by 0.4. For the take profit, let's set this to start at $5, jump up to $50 in steps of 5. And our stop loss will be based on a number as well. Because I don't want to risk my entire account, let's try $500 to $3,000, jumping in steps of 500. all the modifications have been made. So let's go through each of the screens so you can double check on how everything is set up. The set variable, the first long trade. The only thing we changed here was round. The first trade short. The take profit. The next trade long. The next trade short. Now that our template has been created, how you would use that is you go into your builder and under full settings, what to build strategy from template. That is where you add the file that you just created. And what strategy quant will do is see these green bits under random condition and random numbers. It will fill that in for you. So let's take a look at something that I've created earlier. Before I jump into the results, I still do want to emphasize that's important to build your strategies properly. What I mean is have proper processes in place, like small in sample, large out of sample, do a lot of robustness tests, and don't just create the strategy and put it into your live account. But if I talked about that in this video, it would be a very, very long video. So let's just jump straight into the results for now. I've got some strategies here for the Aussie CAD and the Aussie New Zealand. Let's open up one of them, and I'm just going to show a pretty average one and go straight to the source code. Remember how we had those parameters, and they are represented here. So these numbers here. So 40 means the grid step. The initial lot size is 0.05. The multiplier is 1.6. The take profit amount is 15, and here we are having a stop loss of $1,000. So every time the account hits a maximum loss of $1,000, it will close all trades and then continue trading. That's why when you look at the equity chart, you see it goes up and then it hits a maximum of 1,000 stop loss. It takes the hit and then continues going up again. So some accounts will continue to take this $1,000 loss, or other accounts, let's open this one up. This one looks like the stop loss is much bigger, and I'll know that by going to the source code. Here our stop loss is $3,000. So every once in a while we hit a maximum stop loss of $3,000 before continuing on. And some strategies don't ever hit that stop loss. So for this particular strategy, it has a $2,000 stop loss on the Aussie CAD, and it never hits the 2,000 stop loss over the past few years. But we do know at least that there is some protection in place, unlike the other strategies on MQL5 that have no stop loss. And we can dive into the source code a little bit more so we can see exactly what logic it applied for us. I'm going to scroll down. I've got the pseudo text in here, and I'm just looking for the bit that has the strategy logic, and it here, the first trade short and the first trade long. So here we are using the linear regression is lower or equal to 46.2% of the values over the past 828 bars. If I pick another strategy, you can see this one is entering based on the close monthly, is falling for 2 bars. Another one, this one is now using Bollinger Bands and the Karma indicator. So what we've done is we've created a template that will let Strategy Quant pick the entry criteria for us and pick the best multiplier, the best gap, the best initial lot size, a stop loss, and a take profit amount. Now I have control. I can use Strategy Quant to create unlimited grid martingale bots for me. I know each one has a stop loss. I know each one has a take profit, and I can control which currency pairs, which time frame, so I can build a truly diversified portfolio of grid martingale expert advisors that will not blow up my account. A couple of quick tips from my experience with trading with grid martingale expert advisors. So these require currencies that tend to just flip-flop up and down a bit without any major trends, because that is where they will blow up and hit the stop loss. So I would avoid trading on gold, and I would avoid trading on Japanese yen pairs, especially the US Japanese yen and especially the pound Japanese yen. I do want to re-emphasize here that this is definitely not financial advice. This is a how to build your own grid martingale expert advisors so you don't need to spend money on the MQL5 marketplace. Today, we didn't start off from scratch. We used a strategy that we created in this video right here. So if you want to understand the basics and the logic behind the Grid Martingale Expert Advisor a bit more, then I do recommend watching that video. Thanks. Bye.